Hey, what's going on YouTube? In this video, we are going to go over Generac Holdings, ticker symbol GNRC. Company did report their Q3 earnings about a week ago and beat on top and bottom lines. Company also does have about 8% short interest, and year to date company is up 6%, and over the course of 1 year also up about 6%. So we're going to go through a few news articles on Generac, take a peek at some of the products that they provide to us. Also, we're going to look at the financials, go over the financials on the company, and then run those financials through a calculator to figure out what the company is worth today. So some of the main products that Generac does offer is home backup power, which equates, residential is about 54% of this business. And then I think it's 35% of commercial business that we can see here. This is for like commercial properties. You build a new building, like a Menards or something like that, you have to have a massive generator installed. Also, they do offer solar and battery storage. However, their solar sector, they outsource the solar panels, but the battery storage that we can see here is produced by Generac. So the panels get outsourced by a different supplier. They do not disclose who that is. And then they obviously supply the battery storage. So one of the big key components to this company is their battery backup for residential properties, mostly in like Texas, California, and Florida, because they see the most severe weather and they have the most amount of power outages. Now, the combat to that for these power outages for the energy companies is to bury these lines, which Florida and California are in the process of doing. California, they passed a law many years ago stating that any new power lines to be installed underground. So obviously that doesn't resolve all potential power outages, but that does reduce the amount of power outages for sure. However, if the power outage does go out and if the line is underground, it takes about 60% longer to repair. So one of the big questions I kept asking myself as I was going through this company is, why would I, as a homeowner, want to purchase a generator when I could just go out? Because a generator here, if we go over to their products here, if we go to home backup power, and we can see here, we got different generators that work with our home. Obviously, there's a cheap one here for $2,000, but you're probably looking at about $7,000 potentially for a generator, right? And then you need to get this switch panel as well, this transfer panel or transfer switch, I think is what they're called. So you got to pay for all that, and then on top of it, you have to have a gas line ran to it, and then on top of it, you have to have an electrical wire ran to your breaker box. So not only do you have to pay for the generator, you have to pay for the labor to have it installed, which is probably going to run you about $15,000 all in. So you're talking $15,000. Most people aren't just going to fork out $15,000 to have a generator sit in their backyard for the use of it a couple times a year. Now, if you're in Florida, California, or Texas, maybe it's a different story, but for other places, that's not a very common thing. Most people would probably think, okay, if I'm going to invest $15,000 into a generator, why not just invest my $15,000 and buy some clean energy solar and then get some solar panels put on my house and have energy or battery backup. So if power does go out and for some reason it's at nighttime or whatever, it's out for a few days, well, at least you have battery backup that'll at least maintain power for your house for hopefully the duration of the power outage. So personally, if I was to do this, I would rather get a battery backup with solar panels, and then I don't have to pay electricity or pay less of an electricity bill as well, or potentially no electricity bill. So instead of paying $15,000 for a generator, I can just get solar panels, and then I'm at least getting my money back when I make that purchase on solar panels. So that is my biggest argument on that product line, is like, why would I want to buy a generator when I could get solar panels? Yes, it costs more money, but I can at least see a return on my money versus no return on my money. It's just a product, or it's just a generator sitting in my backyard. But let's look over the financials on the company. We can see here's last quarter reportings as well. We got some of those numbers transferred over into our charts, but we have revenue, gross profit, net income, all three are trending lower. Net income went from $550 million all the way down to $189 million. So not looking too good on revenues and money over here. On the gross margins, 35.1% in the last quarter, trailing 12 months sitting at 32.9%. It is the lowest gross margins they have had. Net margins sitting at 5.6% last quarter. Currently, trailing 12 months, 4.7%. Also the lowest net margins on the company. Revenue, gross profit, year-over-year change, we are showing negative growth on revenue and gross profit. Return on invested capital, 6.2% has been historically much better. All these numbers are trending in the wrong direction and are making new lows. We've got return on invested capital new lows. We have margins at new lows and net margin new lows. We're making new lows, but we're also making more money than we ever have in the past. So not a very good recipe right there. So we've also got a PE of 40.7, high PE, almost the highest PE we've seen. Earnings yield 2.97%, not great. Cash to short-term debt, they've got 900 mil in short-term debt and 162 mil in total cash. $2.8 billion in total liabilities with $162 million in cash still. So net income to free cash flow, a company does produce more free cash flow than net income. And then we can come over to here. Free cash flow then is $207 million. We have capital expenditures of about $99 million. Company is buying back some of their shares. Currently still says 62 million in the trailing 12 months, but in the last quarter, they did buy back about 100,000 shares. And we'll go over that here momentarily. So a quick breakdown on the balance sheet here. We can see $162 million in cash. We've got inventories are down year over year, so that's good. And we come down here, we've got short-term liabilities, 900 mil, total liabilities, basically $2.8 billion. Now, we've got 900 mil in debt. We've got only $161 million in cash, and that leaves us with $739 million of debt still to pay off. So we're negative $739 million, so we do not have enough cash to cover our short-term debt. And if you wanted to, which it still isn't a great thing, but you could add in accounts receivable to your cash because it is money that will eventually get paid to the business here shortly. But even if you take off 589, you're still negative cash. But if you add in free cash flows of about $127 million, then that should be just about enough to cover all of your total short-term liabilities. Company does also have about $2.4 billion in retained earnings. And then on the income statement, year over year in the 3 months end, we are flat on net sales and slightly up on gross profit, basically just zero growth on that section. SG&A is up about 46 million. They did make some recent acquisitions. Thought maybe it could be from some layoffs, and then maybe assigned orders are starting to come back in. But I did read that they did make some acquisitions, so maybe that could be why general administrative is actually up. So now down onto the cash flows here. We got net income of $120 million. Prior year, we did $335 million in total net income in the last 9 months. We need to add in some stock-based compensation that is up about $7 million from prior year. Inventories did go down, so we get to add that into cash flows. So then we are now left with $205 million in cash from operations right here. And then we have to deduct out CapEx of $78 million, which leaves us with $127 million free cash flow in the last 9 months. And then we can see right here, stock repurchases, they spent about $100 million last quarter buying back shares. Because in Q1 and Q2, they didn't buy back any shares, but in Q3, they bought back majority of their shares. And we can come down and see that here in this statement. During third quarter 23, the company repurchased 875,000 shares and of common stock for $100 million. Averaged it out to be about $114.51 per share. Moving on to the valuation calculator. So we've got Generac in here for a pre-knowledge valuation. Gives them fair value of $46.97. Multiples comparison, we did not have any real good comparables. I did type in 2 different companies here that are not publicly traded. That would be Kohler and Briggs & Stratton that I felt were somewhat comparable to Generac, but obviously not publicly traded. Manual PE on the company, we take market cap minus cash, add in debt divided by cash from operations. It'll take about 30 years for this company to earn its current market cap. Price to book, 5-year average 15, currently sitting at 2.69. PEG ratio telling us 13.3. Grams valuation, $89.61. Discounted cash flow. Analysts had a growth rate of 11%. I put 10% in. History on their free cash flow is negative 150%. Discounted cash flow price per share, $38.57. Rule 72, we have 3 sources of EPS growth rate, and Yahoo Finance and Seeking Alpha both showed negative growth. I just left it at 19.65, but that gives us a growth rate of about 6.5 on the EPS. That goes into 72 11 times. That goes into 10 years, obviously just shy of 1 time. So we get to double our EPS about 1 time. So I give them a future EPS of 5 which then gives us a fair value of $16.38 per share. So on the final valuation of Generac, currently trading at $103.79. I mean, our fair market value in this company is $47.88, 30% margin safety, 34, analyst price target of $139 per share. To get up to $139 per share, I think we're going to need to see an EPS growth rate of like, let's try 50%. So 50% EPS growth rate gives us a P/E fair value of $120, Benjamin Graham valuation of $203. Our discounted cash flow then could be slightly higher. So we could call this maybe 13 for future EPS. Discounted cash flow won't change. So then that would give us a fair market value of $117.45 for a fair market value if we have a 50% EPS growth rate on the company. And I'll tell you right now, that's not happening. Not based on what they're forecasting. They're forecasting minimal growth on the company going forward. They rely heavily on the consumer, on the residential side of things. And obviously the consumers are pretty strapped for cash right now, and they're not going to go out and spend and finance a $15,000 generator or do any solar panel work either for battery backups. So that is not going to help their forecasted growth rate out whatsoever. But because I don't see a 50% EPS growth rate for the future, I'm going to maintain it at 20%, which I think is still a bit high, but that is what analysts have forecasted in this growth rate here. The only reason I could see a 50% growth rate is if interest rates went to zero tomorrow and everybody's like, oh, hey, I think I want to buy a generator because interest rates are low again. So I don't see a big reason to buy this company yet. But over here at the stock chart, we have I've only got 2 trend lines drawn in here really because it's just in a very steep, heavy downtrend right now. There is some support down here at about $80-ish per share. We do have this downward trend line here drawn in. I mean, depending on how you want to draw this thing in, this connects a lot of the dots like this. You know, if you want to draw it in like that, or, you know, maybe like that, you could make an argument that this company is out of its downtrend. The only argument, though, is it is still making lower highs and lower lows. So I would consider this more still a sustained downtrend because of the most recent lower low it did just make. You could maybe argue it's a double bottom, but it did break that bottom. But once it did pop right back up, but bounced into this trend line. Depending on where you draw this trend line in, it's roughly sitting on it. So we'll have to wait and see what happens with Generac here. But based on the financials, based on the fact that this company relies on 54% of their business is based on residential, I think they got some headwinds still coming for them because obviously not too many people are going to go out and buy a generator tomorrow for $15,000 roughly on something that's just going to sit in their backyard that they may or may not use in the future, and they don't know how much it's going to be used. Yes, you can use it. Yes, Texas, California, and Florida might implement, or those people might buy a generator in the future because of the severe power outages they do get. But obviously the electrical companies in those 3 states are working on burying the power lines. Obviously it's going to take a lot of time and money to do that, but it is something that is being worked on. And another key component to buying a generator is obviously fuel costs. It's not, you just don't buy it and then it gets used and it doesn't cost you anything. No, you pay the money to buy the generator, install it, and then you got to pay for the gas that gets used to run the generator. And if you're going to be using propane, it's going to cost you potentially up to let's just say $200 per day. So if your power's out for a day or two, you just spend $400 just keep power on in your house. Or you could buy a solar panel, obviously package. Obviously, yes, it's not cheaper, it's more expensive, but then if power does go out, it doesn't cost you anything. You know, it's free. It's from the sun. Obviously, you paid initially for it, but the electrical side of things is free. You didn't have to pay gas to run your generator to power up your house. Also, if you don't have propane but you have natural gas, it's a lot cheaper. It's $70 per day, but it's still going to cost you money to run your generator even after you buy it. Yes, those are nominal expenses, but there's also additional expenses into your generator depending on how much you use it in a year. That those add up pretty quickly. But personally, if I was to have a choice between buying a $15,000 generator or a $30,000 solar package with a battery backup, I'm going to go with the solar because then, yes, it's more money, but I'll see return on my investment of, you know, my electrical bill. I won't have to pay nearly as much or maybe nothing in electrical, or potentially I even give some back to the grid and I get money back. Whereas with if you get a generator, it's just there and you use it when you need it. So personally, that's what I would do. That doesn't mean that's everybody, but that's what I would do if I had to make a choice on whether or not I would buy a generator or a solar panel. But I am curious to know what your guys' opinion is on this company. I'd like to hear somebody else argue against what I had to say about, the generators and stuff like that, and compared to solar and the future of this business here. But that is it for Generac. If you found value in this video, drop a like, subscribe, and comment. We'll be back later with another stock analysis video.